Hello and welcome to the third section of the Fundamentals of Investing course, which is the financial statements. Hopefully you have already gone through the financial system and terminologies and quantitative concepts, and now you're here. As you can see, we still have a long way to go. So let's get to it. Now, before we begin, let's go over the topics that we're going to cover in this section. We're going to begin with the introduction to the financial statements, and here mostly I'm trying to answer the question why. Why do we even bother with the whole thing, right? And to my experience, whenever in advance you know the reason why you're doing what you're doing, it kind of gives you motivation to be able to get through it all. So we're going to start with the introduction and mostly ask the question why, the overall why. And then we are going to talk about the balance sheet, income statement, cash flow statements, and I'm going to use the same process. So meaning that I'm going to start with the why question for each and every one of them, and then get through the explanation with some practical examples. And then we are going to talk about the links between the statements. Well, actually, by the time that we are done with the cash flow statements, we are done with this part as well, because whenever there is a link between the statements, I try to mention and address that link right then and there. So by the time we are finished with the cash flow statements, this section will also be done. And then we are going to move on to probably the section that everybody is looking forward to, which is the how to analyze the financial statements. Because let's not forget, that's the whole reason why we're doing this, right? To be able to analyze the statements, to look at the statements and then make some informed decisions. And we're going to use ratio analysis to get that done. And then we're going to finish the whole course with the use and limitations of financial statements. And, although the benefits to the financial statements far outweigh the limitations of financial statements, but still there are limitations that you should be aware of, which could affect your decision at some point. Okay, so let's begin with the introduction. Now, in order for you to understand the importance of financial statements, let's think of a situation that let's say you're presented with an investment opportunity in a company, right? So think about that for a second. What would you like to know before you invest in that company? Well, you probably would like to know whether they're profitable or not. Are they making any money, right? What are the expenses or costs associated with that revenue, right? And what else? What does the company own, right? What do they owe? Do they have any loans? Have they borrowed money, right? Are they capable of, covering those loans in the short term and in the long term, right? What is the cash flow situation of? So you see, there are many questions that you probably have in mind. And you can say, ultimately, you would like to know how the business is doing, right? So that will be the question and one of the main way of evaluating a company's performance is to look at its past. Now, the primary summary of past performance is a company's financial statements. So you can answer all of your questions with the help of financial statements. And they're broken down into three major statements: the balance sheet, income statement, and the cash flow statements. And each of them are going to tell you a different aspect, different story about a company, right? And if you think of the whole financial statements as a big puzzle, these are the pieces to that puzzle. So in order for you to have the full picture, you need to go through them all and understand the links that there are between them. When we are talking about the balance sheet, we are talking about what the company owns and owes, their assets, their liabilities, their equity. We are talking about the income statements, revenue, gross profit, EBIT, EBITDA, net income, stuff like that. Cash flow statements, we are looking for the cash transactions and the source of it. Was it the operation? Was it the financial or the investing part? where did that cash came from? So you can answer all of those questions with the help of the financial statements. Now that is exactly why that financial statements, the performance of a the financial performance of a company matters to many different people. You know, from the management to the tax authorities, the management, it matters to them because, you know, they can assess their their own performance and compare it to the previous quarter or the last year or to that of their competitors, right? And see how they are doing in relation to them and find out the weaknesses and the strength to improve on it. In terms of employees, well, if you're an employee of a company, because of that job security, that compensation, that future compensation, the overall, we can say, financial health of that company matters to you, right? In terms of investors and analysts, which we are going to focus on these two from the point of view of these two mostly. From investors' point of view, obviously, because you want to make a return on your money, right? So it matters to you how well the company is doing or what situation is the company in. And in terms of an analyst, the same thing. You know, you analyze the company's performance through the financial statements to be able to recommend that investment to a client or not. And in terms of tax authorities, well, you can say wherever there is money, tax authorities are going to be there, right? So they are very much interested to know whether you're making money or not. So overall, we can say financial statements are very important because, you know, the past of that company, the past performance of any company can give you clues about the future performance of that company. So it matters a whole lot. So hopefully that brief introduction made the whole overall why clear. But again, as we go through each and every statement, I'm gonna have that specific why to that statement. So by the end of the course, you'll have a clear and better understanding of the whole thing, and hopefully it will make you make better and smarter decisions. All right, so let's continue with the balance sheet.